Hello traders, Gary Wagner here. It is 12:30 in Honolulu, 5:30 in New York on Wednesday, 8th day of January 2025, and this is the evening report for gold and silver. According to ADP, the private sector jobs report revealed that employment grew by only 122,000 jobs in December, falling short of expectations and showing a decline from November's figures. Because of the underwhelming ADP jobs report and despite dollar strength, gold prices advanced. The dollar index rose by 0.31%, taking the index to 108.844, while gold futures for February reached $2,680 after factoring in today's gain of $17.10. Today's solid gain has definitely propelled gold closer to potential resistance, up at around $2,700 per ounce. However, there are a couple other models that could occur that I want to explore on today's show. One of them would be if the jobs report on Friday is solidly below expectation and gold runs dramatically higher, we could see a break or a thrust above the resistance line and not see one further correction as our model anticipates. The other possibility is that the jobs report comes out the opposite and supports the Federal Reserve from enacting any rate cuts in both January as well as March. If that's the case, we could see gold break below this support line. Those are alternative models that I don't believe have a high probability of playing out, but nonetheless, I do want to point that out to our subscribers. That being said, when we look at the entirety of this chart, which goes back to the beginning of this rally that occurred in October of 2023, this sort of pattern, a compression triangle during a correction, has now occurred on 3 occasions. And on the first 2, we had solid breakouts above the resistance line, a thrust, as well as here, a thrust. And for that reason, all things being equal, if the geopolitical conflicts in the Middle East, Russia and Ukraine, are not resolved, and President-elect Trump makes good on his pledge to implement tariffs, which would create more inflationary pressures, I would expect the breakout to be to the upside as it has in the last 2 corrections. We are looking at the same daily chart, although this chart is in Henkinashi or Japanese average format. I am pulling this chart up so we can view these breakouts and look to see what we would typically find as the market broke above the resistance line here and here. And when we look at current activity, and we'll go ahead and blow that up, we can see that body size is nice. There is the absence of lower wicks, and that is what we want to see, because during these strong rally periods, you get exceedingly large body size, and we have had that pivot from bearish to bullish. Now the question is whether or not we will get a clean break above resistance during this leg of the rally, or if there's going to be one small correction before we see the thrust in gold. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.